There you go, the first tick on the index, so holding on to 19,550, climbing a little bit, up about 40 odd points.
Suddenly, in the last 15 minutes, markets have turned for the worse and the Nifty has slipped. The Sensex has slipped from the day's high. Pretty good-looking screen right now, Markets are holding up with a gain of about 85 points.
The day's high, I think, is the 20-day moving average. That's the story so far. 80 points higher. So not quite above the 20-day moving average, which was at 19,626. The high today was made earlier in the day at 621. So almost there, and then some selling coming through. But this is strong follow-through on the Nifty.
There was a day of some gains coming in for the markets. The Nifty ended just shy of that 19,600 mark. That was led lower marginally by, the Nifty Bank, which was in the red. The midcaps outdid the frontline indices. This is Markets Today, the show where we talk about 6 hours of day's trading action in 5 headlines. Let's talk about the headlines itself. Stock markets make a positive start to the week. Sensex now within touching distance of 66,000. Nifty Bank underperformed while midcaps continued to outperform. M&M, Infosys and Reliance were the top gainers. Paytm founder Vijay Shekhar Sharma stitches a sweet deal to buy 10.3% of Antfin's stake in the company in return for optionally convertible debentures. This ensures that the private investor retains its economic interest without depreciation risk. The move also strengthens the founder's grip on the fintech major. Mahindra & Mahindra CEO Anish Shah says they may spin off the electric vehicles business in 5 to 7 years. Says they're targeting EVs to account for 20 to 30% of their portfolio. Also clarifies that RBL Bank is a profitable investment play for the company that offers industry insights. Britannia falls after it reports almost no volume growth in the first quarter. India Cements corrects after it delivers lower than expected numbers, while BHEL too slips after net losses for the company widen in the first quarter. Sebi announces a review of eligibility criteria for introduction and continuation of stocks in the F&O segment. Let's talk about the day's trading action. Then the Nifty's gains today perhaps limited by the weakness in the Nifty Bank and also technical reasons, because 19,626 is where the 20-day moving average for the frontline index is. So let's talk about the day's trading action itself. It did build on Friday's gain and ended about 0.5% in the green. The top gainers on the Nifty were M&M, Infosys and Reliance. Nifty Bank underperformed the blue chips to end mildly in the red. The mid-caps continue to outperform. We have with us Prashant, who will talk about the markets in greater detail. Prashant.
Well, another day of repair this Monday. After Friday's decent bounce, the market moved up once again. The market on the Nifty, not quite at the day's high by close, but not very far away either. The intraday is on your screen. It tells you where we went and where we closed. The Nifty Bank had a more underwhelming session. So absolutely flat, neither down nor up. Underperforming as compared to the Nifty. Broader markets were okay, 0.5%, 0.25% in the mid and the small cap indices respectively. Let's start with stocks. Large caps first, and on the gaining side, we had names like Divi's, Mahindra & Mahindra, which had pulled back on that RBL news flow last week. That gain, numbers were strong. SBI Life, LTI Mindtree, Adani Ports were some of the names which did well. On the downside, we had Britannia, which was reacting to numbers. SBI, there was continued pressure. Friday after the results, stock had sold off, and Bajaj saw some pullback as well. In the broader markets, lots of action. And it was, advance decline was in favor of advances, but nothing very large. Paytm was the big mover, of course, reacting to news flow. REC, HBL Power, huge volumes, big gainer today. VIP Industries, DB Realty, Colte Patel, so a lot of real estate which did well. Religare was a strong mover. There's a big investor who showed up as a shareholder. Sangvi Movers, Global Spirits, where these cable companies, small cable companies, Philonex Cables, Universal Cables, Birla Cables, which did very well. There were lots of losers as well on volumes, and I'm only highlighting those. Adani Green, there was a block, but stock ended lower. ABFRL, weak earnings, demand issue there. Fortis was down again, earnings. Balkrishna Industries, earnings. Kaplan Point, JK Tyre, Parag Milk, Paras Defence, Barbecue Nation was down, Stylum Industries, VRL Logistics, Iron Exchange, Shakti Pump. Some of these are not earnings related. They've done up quite a bit, and they were just pullbacks that we had on our hands. The most immediate task for the indices, for the Nifty specifically, is to cross and close above the 20-day moving average Today we got to within 5-6 points of it, but didn't quite hit the 20-day. A close above it, I think, will get confidence back a little bit more. And I think US market action also becomes important because, we've been getting divergent signals in terms of what that market wants to do over the last few sessions. Back to you.
All right, Prashant, thanks a lot for that. Let's get in some market opinion as well. Morgan Stanley had upgraded India to an overweight rating on Friday itself. And CNBC-TV18 exclusive, Jonathan Garner, who's the Chief Asia and EM equity strategist at Morgan Stanley, said that India is their top spot in the portfolio. Also added that the Indian rupee's tendency to always remain stable is a key factor for that.
For India, some of these secular drivers of the market are really falling into place. So it has moved up now, as you said, to number one in our ranking. And we think it's a time for foreign investors to re-engage with the market. Another key feature of India that we have been talking about in this note is the tendency of the rupee to be far more stable than in the past and to actually appreciate in real effective exchange rate terms versus the currency basket. India has this track record of compounding earnings now in dollars far faster than EM overall, and certainly than China.
All right, let's get you some action coming in from the commodity space. Crude oil prices hit a 4-month high after Russia and Saudi Arabia extended production cuts through September, further tightening supplies. That's not all. In fact, an attack on key Russian oil export hub also had prices soar. And oil prices have seen a sustained rally with them soaring for the 6th straight week, closing in on that $86 per barrel mark. With that, let's talk about the second headline. Paytm rallied nearly 7%. The company's founder, Vijay Shekhar Sharma, has stitched a sweet deal to buy 10.3% of Antfin's stake in Paytm in return for optionally convertible debentures. This ensures that the private investor, that is Antfin, retains its economic interest without depreciation risk, and it concentrates some more equity in the hands of the promoters. Abhishek Kothari joins in with the details. Abhishek.
Well, it is what meets more than the eyes kind of a deal. So Antfin will transfer about 6.5 crore shares to Vijay Shekhar Sharma, and this is about 10.3% of the share capital in Paytm. So Vijay Shekhar Sharma now, as per BSE release, holds about 9.12% stake, and with this transaction taking place, his holding in the company will increase to 19.42%. Now, Vijay Shekhar Sharma will purchase from Antfin via 100% owned subsidiary entity, that is Resilient Asset Management BV. So this will be an off-market transaction. Antfin now holds about 23.8% in Paytm, and post this deal taking place, they will hold with a residual stake of about 13.5% in Paytm. So Resilient will issue optionally convertible debentures to Antfin. So Antfin's economic interest, that is about the stake, will be retained via this transaction. Back to you.
All right, Abhishek, thanks a lot for that. With that, let's talk about the third headline for the day. Mahindra & Mahindra rallied about 4% on the back of a solid first quarter performance. The automakers' margins have come in at a multi-quarter high as well. Brokerages are upbeat about the stock. Sonia joins in with the brokerage outlook. The stock ended at the high point.
Well, thanks a lot for that. M&M was the biggest Nifty gainer in trade today, ending up almost 4% after reporting a very strong set of numbers in Q1. Now, the company reiterated a couple of things. Before that, the stock has had a very strong run. It's up almost 20% in 2023, and this on the back of very good numbers that the company posted. Brokerages have buys across the board and very aggressive target prices as well. Nomura's target price is almost at 2,000 rupees, a big upside from the current market price, and the rest of them as well on your screen. Now, the reasons for the rally are: one is that the margins have come in at a multi-quarter high for Mahindra & Mahindra, which is an improvement both in farm equipment as well as in the auto segment margins. The other thing is that the company has clarified about their capital allocation policy and assured investors that and reiterated their commitment to capital allocation. They also spoke about how the investment in RBL Bank is to explore synergies between the Mahindra Group and RBL Bank, and they will not be hiking stake anytime further. They also spoke about how the EV segment is firing on all cylinders, and eventually in about 5 to 7 years they could think of even spinning off the EV business into a separate company. Some of the risk factors, though, are that the valuations for M&M now are a bit stretched and above the historic averages. So the valuation is currently trading at 20 times FY24 compared to a historic average of 16 to 17 times.
All right, and that's not all. In fact, we spoke with the management as well. Mahindra & Mahindra's CEO Anish Shah told CNBC-TV18 that the company may look at spinning off their electrical vehicles business in the next 5 to 7 years as well.
We see lower margins when a new vehicle is launched because that's part of the cycle. It's part of building the brand. It's part of being able to reduce costs once we've got certain volume. And that's what will likely happen when every new vehicle is launched in the electric space. But as I said, we expect that to be 20 to 30%, so not a very significant number. It's a very good space for us to be in today before we launch our whole range of electric SUVs. Nothing at all. We don't expect anything to change for the next 2 to 3 years. As I said, it's a profitable option play. And just going back to your point, the capital allocation policy remains as firm as ever. In fact, we've strengthened it even more. And our focus is really to create value. And it's not just about where we allocate capital, but the execution on that as well. And that's something that we've demonstrated in a very strong way.
Right. Let's talk about the other stock which was under pressure today. Was the nation's largest banker, State Bank of India, after reporting a decline in their domestic net interest margin, while loan growth was the weakest that we saw for the bank in the last 7 quarters. Our colleague Ritu Singh spoke to the chairman Dinesh Kumar Khara on the asset quality concerns of the bank and, importantly, recoveries.
If you will compare the stress in the first quarter with the first quarter of the previous year, the stress has actually come down. And against that stress also, we have already affected the recoveries to the tune of more than 1,500 crores. It is all temporary cash flow disruptions, and which is attributed to multiple factors which we get to see on ground. There are floods, there are all kind of things which are happening. So these are some of the contributing reasons. But if I look at it, how much out of this stress, how much gets converted into NPA, that number is very small. It is somewhere around 500 odd crores only. So which means that a significant portion of this will get stressed. When it comes to retail in particular, we have to be very mindful in terms of the stickiness of the stress which we get to see. Fortunately for us, that's not the situation. I don't expect much of a challenge from the corporate book. Whatever little challenge I expect is from agri and SME to some extent.
All right. With that, we take a short break. Come back. We'll tell you all the other stocks which were in focus today. Welcome back. You're still with us here on Markets Today. It was a good day of trade and a bunch of stocks were in focus as well. We've discussed a couple of them, but let's talk about all the others that we're tracking today. And this one comes in from the earnings corner. Britannia declined in trade today after they reported almost no volume growth in the first quarter. In fact, if you just take a look at the reported numbers of the company, they were a miss on all parameters. The volumes were flat. The street was working with a mid-single digit sort of number. As a result of which, the revenues grew just 8.5% as against expectations of 11%, and that flew through to the decline in the expectations, or rather miss on expectations on parameters like the EBITDA and net profit as well. What was important, however, was what the management spoke about in the conference call. They said that the market growth has been sluggish versus the past, and they've decided not to take the 2% price hike that they had earlier guided for this year, and that's because they're now vigilant of competitive pricing actions. That's not all. They're also closely monitoring all the stocks of the commodities where flour prices are extremely important to watch out for. They covered for the next couple of quarters. They have ensured that they will take necessary pricing strategies to remain competitive, and they've increased their ad spends from 3.5% of the sales to 4.2% as well, and expect to remain between 4 to 4.2% for this year itself. A couple of triggers for them, the capex for this year is close to around 450 crores. Their focus states, which are the Hindi belt states, have grown at twice the pace of the average growth in the Indian growth for the company, and the cost reduction target is 7 times what it was in FY14 itself. So let's see where it goes from here. But for now, the sluggish demand with increasing competitive intensity has the stock lower in today's trading session. Let's talk about the other one which lost today. It was Bharat Heavy Electricals, or BHEL as we know it, slumped over 2% on the back of a mixed first quarter. The net loss widened to over 350 crores. Vivek joins in with more.
BHEL was one of the top laggards as far as the entire capital goods space was concerned. This on the back of the fact the company delivered a weak operational performance as far as its Q1 operational as well as results were concerned. Now, talking about the revenues were higher by almost 7%. However, on the operational front, the company actually delivered an EBITDA loss of over 240 crore, on the back of which even the bottom line saw a loss coming in over 350 crore. What is it that actually led to the significant weakness as far as the operational performance was concerned? Number one, company actually going ahead and executing lower margin historical orders, and also poor movement as far as order activity was concerned, and also execution trends itself being quite subdued has led to the miss as far as the operational performance is concerned. However, the solace as far as BHEL was concerned in this particular quarter has been the fact that the company has got a robust order book. Order book currently stands well over 1 lakh crore. And when you're talking about the ordering activity, remember the Vande Bharat order win has been attributed and factored in Q1 ordering inflow. So ordering inflow this time around stood at well over 15,600 crore, which is strong set. As far as brokerages are concerned, brokerages are cautious given the fact that weakness continues as far as the operational performance is concerned. CLSA says another weak quarter where both EBITDA as well as PAT saw expanding losses. Along with that, weak execution driven by non-moving orders is another key monitorable. Antique says, order inflow was robust, and that continues to remain the highlight as far as BHEL is concerned.
Vivek, thanks a lot for that. Let's talk about the cement space then. India Cement slipped 4% after reporting a miss in the first quarter. Revenue and EBITDA came in lower than expectations. However, the company reported a net loss of 75 crores, and this versus expectations of about a 79 crore rupees loss itself. Nigel joins in with the numbers. Nigel.
Well, that's right. India Cement's numbers were actually weak. Estimates were lower itself, but it seems it's come a little bit lower than what the street was working with. So on the top line, there's a miss of close to around 40 crores in comparison to our polls. And going by our poll on the EBITDA front, we were working with around 14 crores. Well, it's come in at only around 5 crores approximately. The margins as well, the good point is it's at least moved into the green after 3 quarters of losses. So they've delivered close to around 0.5% of margins. But we estimated a number a little better than that, close to around 1% or thereabouts. They reported net loss. Well, that was more or less in line with what the street was working with. Now, there are some signs that power and fuel costs have cooled off a little bit because they were down by close to around 14%. Transportation handling as well was down by close to around 8% on a year-on-year basis. The employee cost was mildly higher. Remember, for India Cements, though the numbers look weak and the street has been waiting by for delivery, but the more interesting point will be how are they going to deleverage their books and what's the plan from the promoter from here on. So we'll wait by for that. But for the time being, these numbers go down as a little bit disappointing. Back to you.
We will indeed, Nigel. Thanks a lot for that. Let's get you some more stock-specific news as well. Drug maker Cipla was in focus today after it received an official action indicated status from the US FDA for its Pithampur manufacturing facility. The drug regulator said that it's not met regulatory requirements and may be subject to some further action. However, the stock recovered from the lows. Why is that? Well, Ekta joins in to tell you more.
Well, yes, Cipla continued to be in focus in today's trading session on account of news. This time, the news wasn't too favorable. They have received an official action indicated status from the US FDA for their Pithampur facility. Now, the street had largely factored this in because in Feb of 2023, they had been inspected by the US FDA and the Indore facility at that point in time was issued 8 observations. The street had anticipated that there could be an escalation to an official action indicated status and even possibly a warning letter. The company has indicated that their existing products will not see any sort of impact and they would look at transferring the new products which are filed from this facility as well. Now, the stock had recovered from the day's low simply because of 2 factors. One, that the news is factored in, and Advair Generic, which is one of their key filings from this particular plant, is looking to be transferred. The street had anticipated delays and it is expected that maybe Advair Generic would probably come to market in FY25 if things go smoothly in terms of a transfer. The other reason why we did see the stock recover is because of all of the speculation around a possible promoter stake sale, which has kept Cipla quite active. Remember, on Friday's trading session, it had hit a record high. However, the larger picture is important to keep in mind that their Goa plant has also received a warning letter from the US FDA in 2020. This would be the second major plant which is under the regulatory scanner.
Ekta, thanks a lot for that. With that, we talk about the 5th headline for the day. Market regulator Sebi is set to review rules governing the futures and options space. In its annual report, Sebi has said it will review the eligibility criteria for introduction and continuation of stocks in the F&O segment. Yash Jain joins in with the details on this one. Yash, Why this review and what could be the implications?
Sebi has been faced with this constant question on why certain stocks, even when they fulfill the eligibility criteria, do not come under the FNO segment, or when they miss the mark, they're not excluded out of it. Now, to answer that question, Sebi's annual report has made some very important observation. What Sebi said in its annual report is that they will review the eligibility criteria for introduction and continuation of stocks in the FNO segment. Now, as far as Sebi's stand is concerned, essentially derivatives where the underlying stock fulfills certain eligibility criteria, in that case, the stock gets included under the FNO segment. This is expected to happen as soon as the next review cycle itself. We'll have to wait and watch what stocks get included, what stocks get excluded. But of course, there are certain stocks always which are in the question of getting included or excluded. Now, to quickly take you through what are the 4 important eligibility criteria. One is the stock is chosen from top 500 listed companies for average daily market cap and average daily traded value for the past 6 months on a rolling basis. Median quarter sigma order, that value should not be less than 25 lakhs in the last 6 months. Also, market-wide position limit in the stock shall not be less than 500 crore. And finally, average daily delivery volume in the cash market shall not be less than 10 crore for the previous 6 months. These are the current 4 criteria which are needed for the stock to get included in the FNO segment. What we've been given to understand from our sources is that Sebi may look at altering these 4 points to include or subtract some points to make the system more efficient. There's also another proposal which Sebi may look at, which is auto inclusion or exclusion of stocks from the FNO segment. Just like Nifty inclusion and exclusion happens, straight away if any stock ticks all these 4 criteria, then it automatically gets included or excluded from the FNO segment.
All right, Yash, thanks a lot for that. With that, we wrap up on this edition of Markets Today. Thank you so much for watching.